consumer inflation out today. Market looking for a figure of around 4.6%, down from 4.8% in April. What's your expectation on that?
We do expect May to be the bottom, so you kind of have had this slow decline in inflation, and we do expect it to be near its trough now. And we would agree with that. I mean, the rand has held quite strong. That has taken a lot of sort of pricing pressure out of the system and through the pipeline. At the same time, demand, although it's picked up, it's recovered, is still very modest, and consequently retailers still don't quite have the pricing power they would like to have, and so we are still in a very, very subdued inflation environment. So yes, I think that we will see a number near that sort of level.
Well, Nicky, looking forward, of course, the World Cup is said to have an inflationary impact, of course, in South Africa. What kind of impact are you expecting going forward?
Well, certainly I think that in certain areas there have been a degree of opportunistic pricing creeping through, where we try and exploit the foreigners to the best of our ability, that sort of thing. But I think ultimately it's probably been a little bit blown out of proportion, because a lot of the reports we've heard is that pricing has returned to normal, and also some of the anecdotal sort of comments that you've seen around is that most people have considered it to be fairly priced and in some cases even blatantly cheap. So I think that there might be an element of it, but I don't think it will be as negative as many people probably anticipated prior to the World Cup.
Francois, we also had jobs numbers out yesterday, first quarter jobs numbers, so they are a little bit historic, though I'm sure there's not been a major improvement since then. I mean, just looking at the overall scope of the economy at this stage, jobless recovery, you've been talking about that in the United States. We're seeing a recovery in the local economy, although, as Nicky says, demand is still very modest. Where are you seeing us at this stage, and do you think it is going to be a jobless recovery?
I think that's we've got more than enough evidence. 79,000 jobs were lost. And I'm a little bit concerned about the sustainability of the economic growth without any jobs going forward. And also we in a scenario where the demands from the unions, the wage demands are very high, and it's very difficult to get momentum in the economy without any job prospects. So we need to temper down the wage expectations. I think that's the key.
We're not doing that very successfully, though, are we?
No, not at all.
Well, Nicky, what do you make of the wage expectations? 15 to 18% is what Eskom employees are now asking for, and it's getting tougher and tougher in this environment. We usually do see wage negotiations in the month of June and July, but since, of course, last year, it has been a very different scenario that is playing out. How do you see this rectifying itself, if at all?
Well, I think it is a very dangerous thing, and I think we sometimes just brush over it and move on and think, the union's this and the union's that. I think it is quite politically connected to the environment, the change in administration that we've seen in the ANC, the expectation that it would be more labour-orientated, more of a leftward shift. And since then, the unions have become far more militant, far more aggressive. We've seen more strikes. We've also seen more chaotic strikes, to be honest, so-called wildcat strikes coming through. All of this, of course, raises the cost of labour, not to mention very negatively impact on businesses' perceptions of labour. And these wage increases, 18, 20%, when you've just come out of a recession, sure, profit has shot up, but, overall, you need that little bit of room to survive whatever lies ahead and to restore yourself as a business. So I think it's very dangerous, and what will happen is that you probably will see wage increases well above inflation. Companies will probably settle with it in order just to get on with business. But the end result is that you'll have a very slow recovery in an economy that is already not very labour absorptive.
Of course, Francois, well, we're seeing very weak local demand in South Africa at the moment. Some of our main trading partners, Europe and the UK now, coming up with very tough austerity measures, which could put the brakes on demand from that side of the world as well. UK budget yesterday, VAT up, tough austerity measures, banks levies. How do you see this playing out, and what are the implications for South Africa?
I think one will be very naive to assume that we won't be impacted. I mean, to hike the a VAT rate from 17.5% to 20%, that's quite severe. But I think also, Stephen, it opens up the potential to our other main trading partner, the East. For example, in Hong Kong, the VAT rate is zero. So I think we will definitely see an acceleration of growth opportunities from west to east. And but I think the sooner the better these austerity measures kick in. And the main question is, what will happen in America? It's very evident that President Obama is very reluctant to take the necessary austerity steps in the US, and my personal view is that he doesn't have the political capital to do that.
Nikki, just going back to the Eskom saga, it's quite a fascinating thing that's playing out right now, because they're saying, there's court interdicts involved, and basically they're saying that we might not see a strike. But if we do see a strike, how do you see this playing out? Because we saw the Transnet strike 3.5 weeks. So you were talking about, the wage negotiations becoming even more aggressive. Are you concerned about a very aggressive strike with Eskom, and how do you see that impacting the power supply scenario in South Africa?
I think, quite frankly, none of us can predict how that is going to play out. Personally, I hope and pray that it occurs after the World Cup. I hope and pray even stronger that it occurs after winter. I think we all personally feel that way about it. But the reality is that if it happens and it is a protracted strike, I think it signals a change in labour relations in South Africa. We are certainly returning to a far more aggressive environment. And the irony is of the Eskom strike is that really it's a parastatal, it's a public utility. So it really is government. And if you look at the breakdown of the union numbers, increasingly the biggest bulk of their membership comes from the public sector. And that is probably the sector that has no real ability to grow, no real ability to generate wealth, no real ability to pay people what the unions anticipate or expect them to pay them. So at some point, the unions, I think, will have to change their tune. But I think in the interim, we will pay a price for it, and it will come in the form of possibly higher inflation a little bit further down the line, definitely slower growth, and most certainly, I think, a very slow rate of job creation.
And of course, if there was an Eskom strike, Francois, the impacts on big business could be quite severe, because we saw what happened a few years ago when we had those power blackouts, and the impact particularly on the mining companies.
Yes, and also it will definitely dilute the political goodwill the World Cup generated.